Hello, this is DW, and welcome back to the channel. In this episode, we'll look at used car seller Carvana as an investment case, and I'll also show you a few of my trades. Previously, we looked at an overview of Carvana and essentially the pros and cons of buying a vehicle online. We saw the progression of the three companies of which the Garcias have had a controlling interest, first with Ugly Duckling, then Drive Time, and now Carvana. We're also witnessing the effectiveness of good marketing, and certainly Carvana has accomplished that thus far. We'll get right to the point if you don't want to watch the whole thing. Carvana with a market cap right now, mid to late October, at $205 per share. It's around $35 billion. It's a little ridiculous, and you really can't do any kind of price discovery here. Compared to AutoNation at $5.5 billion and CarMax at $15 billion. Bit of a slide recently, down from $220, $230, and Vroom selling off now as well. Feels like it's starting to break support levels here and could retest lower support levels if it's not able to stay above 200. Of course, a short squeeze can change that in a single day. Both Carvana and Vroom could get pumped again quite easily with breakthrough earnings. Again, this is just a guess. You need to do your own due diligence if you're investing with real money. The big risk here is a market sell-off, and it could sell off hard with serious volatility with the election only weeks away. Like everything else, it's just priced to perfection, and there's no room for error. So the first few months of 2020, we saw the news of the CV and closures just crush the stock market. But now the spring and summer months has brought this massive rally. You can certainly call it a bubble now as of fall 2020. Anyway, we saw Carvana sell off so hard in March. It was about a day or two away from being a 100-point sell-off from peak to valley. To answer the question in the previous episode, what caused this huge rally for Carvana stock in 2019 and now also 2020 following this March sell-off? Well, despite losing money on every vehicle sold, it's viewed as a high-growth stock. This is because the business model allows it to be scaled, with the only limit being the total number of used cars sold in the United States, and this is estimated to be a $1 trillion market. Combine that with a low float and high institutional ownership, and this has also created several short squeezes along the way. As I pointed out, it's not a service that I personally use, but it is a company that I invest in, and that's a big difference. Compare Carvana to a standard new car dealership, and that now looks like a very dated, almost Cold War era business model, with so many fixed costs going to a single dealership as a discrete unit with really no leverage. Besides, most new car dealerships make the most profit on their used cars, which is why those trade-ins are so important. There's some exceptions to this. A couple of those top-tier Porsche dealerships doing really well. Examples, the Penske dealership here in Phoenix, and these Lithia dealers on the West Coast occasionally have great prices. We're going to split up the episode like this. The Carvana investment case. We'll also discuss vector investing in Carvana versus Vroom. There's actually a lot of car stocks in this field now. We might do a breakdown of all these in the future. Part 2, FLIR. This will be the stock pick. This is really well hedged in the coming years. This tech can now be used as detection for a high fever. They also have a mini drone with multiple uses. Very cool, yet creepy at the same time. Part 3, Phoenix, living here, saving money, and price discovery. Before we go really deep into Carvana, we're going to do a movie tie-in here with Predator 2. If you haven't seen it, skip ahead about a minute. What this episode really is about is mostly my observations from watching the stock loosely from its IPO, being puzzled by its run-up in 2018, and then me getting into CVNA in early 2019, about right here, and making a low six-figure profit just in 2019. So now I've been in and out of the stock for over 18 months, but I have no position in it right now. And just to reiterate, I have no connection to the company, and I don't personally know anyone who works there. Trading the stock, for me, it was a huge rush. Sometimes you'd have a period of anxiety, but with patience and a clear head, you'd be well rewarded, as the stock essentially would throw you a $10,000 to $20,000 gift. Take it. For me, this is a single round-trip trade over the course of a few days or a few weeks, which is exactly what happened here with the stock selling off in the hours leading up to their second quarter earnings announcement in August 2019. The buy-in here was around 3:30 p.m. I sold 2 days later. This is one of my favorite trades, even though it was now a year ago. It was the easiest $20K I made in 2019. If you can master a stock like this on these large swings, you can do really well. So I'm not a pro, and I've only read a handful of books on investing, but any of these books are light years ahead of anything you'll see on YouTube or these $300 trader classes. My recommendation, if you're starting out, is this Peter Lynch book, One Up on Wall Street. Peter Lynch was a fund manager at Fidelity and now retired. His mantra is to invest in what you know. There's a lot of art of war tactics in there as well. I've kind of hijacked his advice for my own materialistic needs and have modified a little with more emphasis on short-term and swing trading. The goal here is essentially that you want to try and buy the dips, then sell into heavy buying strength. You may ask, how does art of war tie into finance and investing? Read some of these headlines from the last year. But more on that later. We're going to do a movie tie-in here with Predator 2. That was the previous clip shown. Now, this movie came out 30 years ago this November, and almost all the critics hated it, Ebert included. 1990 marked an interesting year as the excessive force in releases was kicked up dramatically, as seen in Total Recall, Die Hard 2, Gremlins 2, RoboCop 2, Child's Play 2, It, and also Godfather Part 3, Goodfellas, King of New York, State of Grace, and Miller's Crossing. Many of these were sequels, and maybe that was why, as the studios felt they had to one-up the body count, and Predator 2 is no exception to this. The plot focused on our beloved outer space hero on a strategic hunt, with the target being rival drug gangs set in the near future, 1997 Los Angeles.
Come and get it! The fuel is ready!
Yeah, that's right. Come and get it.
Bill Paxton having a role in this as a detective. Bill looking very early 90s here, almost like he was en route to a Color Me Bad edition. Gary Busey has a small part as well. The story borrows a few items from the Alien franchise, such as the "let's capture the aliens so we can study and repurpose it as a weapon" plot device, and also the motion tracker.
It's moving back against the wall. It's backing up. It's moving away from them.
He sees them, Garber. Your boys have been made.
Sir, it's circling around behind them.
Get them out, Garber. They're walking into a trap. Get them out!
There's a certain coolness factor of the Predator's kinetic weapons, and this is filmed before CGI really took off. Combine that with a meticulous sound and special effects, as we see these calculated attacks carried out as the film progresses.
Keith, you alright?
And these all serve to make the sequel a little underrated and underappreciated. Kind of an art of war connection here. You can think you have the best tools and tactics and still screw up. This market sell-off in September 2020 was a big reminder to some tech investors why you should consider taking profits, especially when the Nasdaq's been up 10 days in a row. Anyway, not sure what's going on here. Maybe he's just trying to charge his Tesla. Okay, back on track. So the online used car field added one more player with a Vroom IPO on June 9th, which brought us this ad.
Hi, can I help you?
Again, we see the stereotype of the sleazy car dealer, and that looks so familiar. It's like a page taken right out of the Carvana marketing playbook. We'll come back to Vroom in a little bit and look more closely at the bull versus bear investing aspects of Carvana stock. We're going to call this vector investing for now, but the key takeaway is to be familiar with the downside risk versus the upside. If you could rank these with numeric values attributed to the risk level, it would be even more helpful. Some questions to ask here. Are there barriers to entry? And at the scale, yes. Good interview with fund manager Cliff Sosin, linked below on the same topic. Cliff's an expert on Carvana as an investment case and has a much sharper eye in its business model compared to the majority of analysts out there. Carvana added a few more vending machines recently, around 25 of these now in 260 markets. So long story short, selling used cars at this scale would be hard to get into. As of right now, for a brand new company, it might be impossible. Growth trends, it looks like they put a lot more money into red states than blue. Texas and Florida being the two big strongholds here. Good strat, as young people are moving from blue states to typically red ones, and they'll need a new car if they didn't own one already. But on the flip side, low inventory right now for used cars, this is a huge negative, and it may have an impact in future growth potential. So we'll have to see on the next earnings and the one after. The Carvana business model, even though they're losing money, they are able to cut costs via their hub and spoke delivery model, and the scale capability and its potential on future earnings is where some of that valuation comes from. We'll also list that as a positive. Part of that business process is the inspection and reconditioning centers, which perform those functions and also take 360-degree pictures of the car's body in an automated fashion. Carvana acquired this technology by buying Car360 outright a few years ago. Mark Cuban had a stake in that. In the previous video, it was stated you can't do an inspection. You can actually look at it and do a test drive of the vehicle if you buy it at the vending machine. We're going to list the profitability as a negative. That was actually pushed back by a year. Marketing. This is a positive. Watch the last Carvana episode on this channel. I always ask people if they've heard of Carvana. It's always a yes. Young women, they might be in their 20s or 30s and single. You can see a lot of them being uncomfortable going to a car dealership alone. It's kind of intimidating, and you can see Carvana benefiting from just that facet. And they have Rob Corddry starring in their brand new ads. Home car delivery, big benefit right there with the current climate where some people may want to stay home instead of going out. Car buying and pickup. This is where you sell Carvana your car. A buddy of mine did this pretty seamless process. They came with a flatbed and just picked it up, and he got the check right there. A couple other things, the tech side. Look at Carvana today versus this business 15 or 20 years ago. They're likely using a web-based CRM for customer tracking, sales, delivery, tickets, and feedback. Best of all, you can spin up reports from those data sets very easily. 15 years ago, you would have had a SQL database, so you need a SQL DBA, you have security patches, you have to run IIS, you've got encryption keys, and you may need middleware systems to get those reports. The point is, it can get a little messy for a prod environment, especially from a compliance perspective. And that's one aspect of operating costs that can be trimmed today. So this is a positive. You can also think of tech adding value here in the form of data layers. Not quite sure Carvana is a tech stock, as it doesn't solve the last mile delivery problem. They can market it as such, but as mentioned, the real value here is the layers of data they can essentially tack onto a commodity, whether it's the included options, number of keys, rock chips in the left-hand fender, for example, and also the vehicle's history, including the number of owners. One neutral point, the company's structure is based on a VIE. It's an interesting model, but still tied to drive time in some aspects. There's a good write-up on this by Philip Martinelli via Twitter. It's 30 pieces in total. I read a long time ago that this model would do well in a recession, but couldn't quite find that story or opinion to show you. It looks like drive time has been through a few recessions now itself, and it's still around. Big downside here, market volatility, index sell-off. So the election's coming up in a few weeks. Last March, you can see the index is rallying hard on Biden doing well in the primaries. We're going to see how that plays out very soon. There's a short supply of late model vehicles, particularly trucks and SUVs, Toyota especially. Always high demand for those. The analysts discuss Carvana having a benefit here, but we don't really see it. There's just fewer vehicles available, and they have to pay more like everyone else accordingly. Problem selling at scale. It's hard to sell these high-end cars with zero problems. And the idea that these all can be repaired for a few $100 is a fallacy. All the high-end German cars are a good example of this. Everything from the 21-inch wheels to the sensors. My experience, you can get a great deal here and there, but these would be used parts and not at scale. Another issue, Carvana uses a heavily outsourced model for many of its key services. One of these is out-of-state registration and title. This service is performed by a company called DealerTrack. On paper, this seems like a great idea, but current events of 2020 show some cracks in this company's SLAs. The understanding is that the Carvana customer receives the existing title in the mail within a few weeks, maybe a month. The customer then takes that title documentation to their DMV or MVD to get the vehicle titled in their own name in their own state. DealerTrack is owned by Cox Automotive, same parent company to Cox Internet. Anyway, Cox Auto has been bleeding cash for quite a while. Heavy layoffs in March 2020 when all the fun started. What this means for Carvana is delayed processing times for titles. The sources for this, one great website for finding dirt on companies is thelayoff.com. And users on Reddit are the ones mentioning these delays. In a few cases, it's been months. Dependency on subprime. This is mixed, both good and bad. The US economy is so shaky it now needs these just to get by. And if Carvana wasn't in this business, their customers would get these loan products somewhere else. It's also possible that a buyer has good income stability but shaky credit. Valuation. We'll look at this compared to market cap. Well, let's just say the share price pops up to 280 or 300. That gives us a market cap of 46 to 50 billion. And the issue is, how is that going to get to the next leg up to a 60 billion market cap and maintain that level? Is it even feasible given the supply shortages in the secondhand market? Vroom in comparison, we'd really expect this to be doing better, maybe in the $60 to $80 per share range. Right now it's in the low 40s after selling off from 70. I had a long position and got stopped out. Just lots of downward pressure since the August spike, but the management team is really quiet, maybe too quiet. They've only had 6 or 7 PRs out now, and 2 of them were on the secondary, which was just terrible timing. I do like them because they acquired Texas Direct, which has huge selling volumes. I sent their IR team an email a few weeks ago, just basic questions, nothing serious or panicky. I just asked, do you have any conferences planned in the future? And I never even heard back. We might do another episode on Carvana and Vroom. I do expect Vroom to get pumped again, but it's hard to say. Both this one and FLIR were actually green on Friday, October 30th, while the NASDAQ indexes were down over 2% most of the day, and Carvana sold off a little bit too and closed at 185. I really like Vroom here and may get back in if it reverses its sell-off trend and shoot for an exit for the 70 to 75 range. One stock that looks very recession-proof is FLIR. The company's stock ticker matches its name. I do have a position in this 600 shares. Right now it's trading around $35 per share. If it falls to under 25 a share on a steep market drop, I'll plan to double up, or I may average up going forward. FLIR is actually an acronym for forward-looking infrared, and this is the lucrative thermal imaging market. Obvious connections here to the police and military. They have a green tech solution, and their hardware can be used to detect wasteful leaks in the HVAC industry. Remote hazard robot, cameras built specifically for drone usage, DJI or other. You could buy a bunch of their gear and make your own Predator movie. Very cool videos on their YouTube channel. Here we have a Bill Nye impersonator. This is a handheld detector, and it actually tells you which radioactive isotope it's discovered. You can argue that this tech can be reverse engineered, but the temperature gradients provided by FLIR is going to show a clear advantage. You can see that in the video shown here. Plus, some of this hardware is government contracts, and they're always going to prefer an established, domestic-based company over anything. And they also have this. This is a nano drone called the Black Hornet PRS. It appears to be a military-only device. And to be honest, this is a little scary if you follow conspiracy or military-industrial tech. Ask yourself, what will this device look like 2 to 3 product cycles into the future? A couple of videos are up on YouTube. It's not perfect now, such as the low flight duration times because of the battery limitations. Here's some specs: 1.2 ounces, carbon fiber rotors. A lot of drone fanboys think they can make something better, but can they offer the same cybersecurity, update capability, warranty, and technical support for this kind of device? Pretty sure FLIR is going to be around years from now. Not sure if the same can be said of other companies. Watch the videos of this thing in action, and suddenly even the Predator's space-age weapons look a little dated. Take a look at their product line. Just go to FLIR.com, look for both the solutions and products links. Lots more on here. We could be missing quite a bit. FLIR stock pays a dividend. It's just under a $5 billion market cap, and the stock price is well under its 52-week high. The company's profitable, decent profit margins. They have some debt, but it's certainly manageable. This is kind of a mix between a growth and a value stock, and it looks a little like Garmin stock about 15 or 20 years ago. Again, do your own due diligence. If the market tanks, this could as well, but the potential to hold through a downturn is certainly there, and this will be very well poised with an upturn and recovery. So the final part is living in Phoenix, and for me it's now coming up around 15 years. I moved here right before the peak of the last bubble, and it blew me away how expensive things were back then. I like to think we're in the new Wild West, the old Wild West having this cowboy culture, the new Wild West having relaxed lending standards with heavy consumer debt, and this artificially drives up the prices of both housing and cars. My contention is that a swing back to the old Wild West would be a return to normality. Both. It's crazy seeing some of the finance stories unfold here, obviously Carvana being a big one. It's one of the best performing stocks in Arizona since Taser blew up in 2004. I think that was around a 40x run, and that was years before QE. My favorite story, though, is the therapeutics scandal. You had an interesting sales promo video for their fentanyl spray, and this headline, and the rest is history. There's a great video by Frontline PBS which covers this. I think it's on YouTube now. There's a lot of flexing and fake gurus here. This CoffeeZilla guy has a great channel exposing these scammers. There's a couple of these expose channels now. All good stuff. You can't just lie about how you came across $100 million, but most people just don't want to hear the truth nowadays. As I said, there are real successful entrepreneurs in Phoenix. I came across one young woman who lives here, and she's just killing it. I'm talking Carvana stock option money, and I'm going to guess a low 8-figure annual income. See if you can guess who this mystery woman is in the comments based on these pictures. Sorry, it's a little blurry. I hope you enjoyed the video. Smash that like button if you like the content, and please share it as well. Feel free to subscribe. Just keep in mind it's hard to do these movie episodes that tie into stocks, so these might be few and far between. We'll try to do some coverage on basic tech, like is this thing worth it? Examples: HP Spectre 15 laptop, the Galaxy Fold 2, also passive income strats such as Turo.com. It's like the Airbnb of cars. Might do a deep dive on living here in Phoenix. I had a little more on this topic, but it got cut out. May also try to do a bull versus bear view on real estate here. I'd be really careful whatever line the real estate agent is telling you. Thanks for watching.